This is Algo Factory. Check us out over at www.algofactory.tech. Here is the link and the QR code. Go ahead and zap that, or just go to the website www.algofactory.tech. See what we do. We help people become traders, and we help people create their own trading algorithms, which can eventually be hard coded. And that way, if you understand how to do that properly, you can eventually have that kind of trading for you. Just walk away. But there's a lot to that. And in the meantime, before you even get there, you got to develop the algo. You got to develop the trading method ahead of time. That's how we do it anyway. So, you can do whatever it is you want to do, but that's how I do it. Okay. And by the way, nothing we say is investment advice. Go ahead and consult your licensed advisor before risking your money on the markets, because risking your money on the markets is inherently risky. That's why they call it risk. Yep. You can lose your money doing it. All right. So let me go ahead and grab the link for this YouTube broadcast right now. I'm going to throw that out on the Discord. And anybody who is over on the Discord, just a little heads up, we are probably moving off of Discord and onto another platform. And I say we, I mean Rogue. I know this is not a Rogue production, but of course, Rogue are friends. And, if you know me, you know all about that. So I'm going to go ahead and throw the link up on the Discord right now. Join us live. Okay. So beginning of the month, and in an hour, the market opens. Pretty wild market overnight. Beginning of the quarter, there was a lot of conversation this last week or two about how, I don't really do a lot of trading towards the end of the quarter. A lot of funds are just making sure that they stay in profit. They're rebalancing. A lot of funny things happen in the market right there at the very end of the quarter, and it's a dangerous time. And the very beginning is pretty dangerous as well, as we can see with the European Open last night. It was pretty wild. So I'm going to go ahead and share the screen here pretty quick so we can take a look at that and take a look at the events that are coming up this week. And we'll do that. Hold on just a moment. Stand by for the screen share. Okay. There's the screen share. Let me zoom in. And that way, for any charting that we do, people can see the actual numbers. Okay. All right. And then I'm going to roll over to we're already there. We're looking at the EUR-USD. So this is the euro versus the dollar. There's a lot of liquidity, probably the most liquid pair in Forex, if I'm not mistaken, at least one of the most. And it's been on a solid downtrend for quite a while. You can see that the dollar has been getting stronger. A lot of talks about the dollar getting stronger, interest rates going up and up and up. And this was no exception, although we did have a nasty move last night there, right at the London Open. If you can see this nasty candle where price popped up, and it might be that a lot of people went long right there. That we're going to zoom in on that. We're going to look at a lower time frame, but that's a nasty wick right there. So there's probably people who went long and got excited and then got knocked out of their trades. Likely it was a news event of some kind, or it could just simply have been the London Open at the beginning of the quarter. So let's take a look. We're going to go over to the calendar at forexfactory.com. There is another calendar that I've been looking at, and it seems like maybe a slightly better calendar than what I've been using. But Forex Factory, I've been using it for a long time. It works great. I know there's other people who think their calendar is better. That's fine. But no high impact news at midnight, or I should say at 2 a.m. EST, which is the London Open. Nothing. Just a wild London Open at the beginning of the quarter, which is to be expected if you ask me. I mean, I haven't, it's not something I have strictly back tested. I've seen it before. So I simply don't trade it. Just like I don't trade the New York Open, not until at least an hour or two after the Open, maybe a half hour, depending on what price acts like. If price resumes a prior trend, then that's when I'm interested in trading it. But look at this crazy, move up here. This is I mean, it's notable. I wouldn't necessarily call it crazy, but it's notable. You have this downtrend already, kind of happening here, and then all of a sudden, within 2 bars, you have quite the move, a pretty substantial move up, and then you have price reject back down. So you have what looks like a double bottom here prior to that move up. You have price coming down on what was a support right here. So, and it did form a head and shoulders, but it's a pretty crazy head and shoulders. So for anybody who was trading and doesn't mind trading before the Monday New York Open, which generally doesn't work for me. I mean, if I'm up, I might trade that Sunday night because sometimes I just, I'm up. I'm crazy like that. But there is a substantial head and shoulders here. And head and shoulders in the EUR/USD, I think, if I remember properly, my testing had it at like the high 80 percentile hit rate. And that, of course, over time, those things change. That I didn't tested that years ago. So there's that kind of, in fact, it's probably more proper head and shoulders. If you go back here, it does break the neckline a little bit. It's not very clean. But another one to look at might be right here. Oh, let's get that back up. You have a double scenario here that could have been played. This one has a neckline that I don't like, though. It's sloping downwards. So, but either way, there's a lot of basically on the higher time frame under any circumstance, you have price trying to rally up on a downtrend and getting rejected, still trying to rally up and then getting heavily rejected right at the open. So that went ahead and pushed price back into the expected direction of this longer term downtrend. So that was playable. Again, if you're awake and if you don't mind risking trading the beginning of the quarter, which can be pretty wild. Of course, the beginning of the quarter is when a lot of money that was on the sidelines jumps right back in, and that's how you end up with these kind of volatility. Sidelines money hopping right back into the market, and I think it possibly is a lot of algorithms kind of causing this price movement. A lot of high level institutional big money algos. So we got Jay Martin in the house. We actually have a few listeners right now on YouTube. So do me a favor, hit the like, subscribe, do the follow thing. Give us some love on the algos. I don't really expect to get a whole lot of attention on YouTube. It's not why I do this. It's for beginners and it's for people who already know who we are, and they can come on in and watch us do this beginner class. So that's what that's about. All right. So as I talk about with all of my people, the entertainment that I provide is going to involve some of my strategy, and my strategy is very, very solid around not trading news events unless you have the information ahead of time, right? If you know that the PMI is going to come out a certain way, or if you know what Fed Chair Powell is going to say, or okay, if you happen to have that data, that's another story. But I mean, I know people who are pretty good at guessing what's going to happen. They're more right than wrong, but it's just not the kind of trading that I do. Like, if I knew that the Fed Chair Powell was going to be hawkish and I had an 80% chance of it, and I knew it was an 80% chance, then I'm not afraid to take some trades based on that. Like as in getting into the trade beforehand. But it's real risky to do that, in my opinion. And there's a lot of surprises. There are a lot of surprises in those scenarios. But we do have today, 8, 9 a.m., a lot of talk. So I probably wouldn't be trading until after, this was, when I say 9 a.m., that's Mountain Time. So 11 a.m. EST, that's probably when I would take a look at something like that. At the about 11:30 p.m. EST, you're going to have some pretty big news from Australia. So if you are in an Aussie trade or want to be should probably understand that there will probably be some action right around that time. This is beginning of the quarter, and it's it looks to me to be their basically their version of the FOMC, which is very big, talking about their cash rate. Now you have over the European Open, the Swiss CPI, and that's going to be powerful if you're trading the Swissy. Job openings, I think that's a monthly report. That's going to be tomorrow morning, 10 a.m. EST. So the market open today and tomorrow is going to be pretty risky because a lot of market data is going to come out. 30 minutes, 1 hour after the open, hour and a half. So this is a monthly number, and we're going to find out what the jobs report is. I will say that the data has actually come out slightly negative over the last few months, negative or neutral, but a lot of these data are revised afterwards to be less than good, if you will, for the economy. But it doesn't matter that the data are manipulated or not, right? What matters is what the data say, because the market is going to react to that. And what I look for in these announcements is I wait for the market to kind of digest the information a little bit, and then I will go ahead and once the digestion happens, or apparently happens, price resumes direction usually, and I'll look for a move in that direction. And if the information is in tune with the market's direction, then that can kind of work out because it adds volatility. Tuesday, October 3rd, at 9 p.m. EST, the New Zealand gives their cash rate and rate statement. So if you're in a Kiwi trade, and it's if you're in one already or you're about to be in one, understand that will probably have an effect on your trade, whatever they decide to do. I'm assuming they're going to be hawkish because most people are kind of being hawkish right now. That means that when I say hawkish, I mean that they're talking about raising the interest rate, right? Dovish is the opposite, talking about lowering the rate. And right now we seem to be getting hawk talk. Wednesday is the non-farm employment change and ISM services PMI. So basically we're going to get some data. Again, on Wednesday, the market open is one thing, but a half an hour after the market open, we're seeing more data come out. So Tuesday and Wednesday, we're seeing data come out 30 minutes after market open. So trading the open itself might be a little risky. Again, as this data can be manipulated, it's not necessarily like, to sit there and kind of look at data and say, well, we think it's going to be this. Like, well, this data often comes out manipulated, which is life. Again, whatever that manipulation says, the market's going to react in a certain way. And then once that reaction happens, either we react to that reaction or we wait for it to pass and take advantage of the volatility that it adds, right? Okay, so we have Thursday unemployment claims. That's every week at 1 hour before market open at 8:30 a.m. EST. Friday is more data coming out. A lot of employment data, unemployment rate. You have non-farm employment change, hourly earnings. Again, data that can be manipulated, but it's an hour before the open. So Thursday and Friday are kind of nice because the data happens before the open and can add a little spice to the day. I personally wouldn't try to trade. Let's just say the market appears to have digested that data after, say, 15 minutes. I would not be trying to trade that, because unless it's a very fast trade, because then the market open happens, and that could be a little, like, could be less than predictable. I mean, I might risk something on it, something not big. So that's the week coming up. By the way, the gorilla will not be joining us today. He has a personal matter. No problems at all. He just has something he's got to do today. That's a good thing. So we're not going to see him today. Got that note last night. So we can take a look at charts here. I know Bitcoin is probably of interest right now. That's been moving up. There's the Uptober narrative right now. Certainly the charts are bullish on Bitcoin for at least the short term. I wouldn't really count on that lasting past October for very long, or even through October. But October tends, I think 9 out of 10 Octobers is a good month for Bitcoin. That's historically. So it is something to historically be dependent on. But there has been one red October, and it could happen again. I mean, it's not guaranteed that we're going to have a green October for Bitcoin, but it's the statistics are there, the odds are there for that. So let's take a look here. All right, so the high time frame, I would say, is kind of bearish, but neutral. Seems to be kind of peaking up just a little bit. However, if you think about it, let me see here. Reset chart. Where's that button? I'm gonna. I want this here. All right, so we're just gonna take a look at the metrics in the higher time frame, and then we're gonna go to a less panels here. But I'm just looking at the algos, and right now this higher time frame, this half month chart, basically, that can flip at any time. And that was going bearish. Now it's flipping bullish, but it could go bearish again. And the reason that that's very possible is the ADX. The volatility is so low on this. Not what I wanted to do. Let's see. When you look at the volatility here, see how the ADX is in the toilet? This is our ADX on like the 18-day chart, which is like half a month. Extremely low. When the volatility is low, price can flip direction. Your trend can flip direction very easily. Even a high time frame trend that's bullish can flip bearish in like a moment, especially with Bitcoin. Because Bitcoin has these crazy pumps and dumps that'll, you'll lose 10% in like a day or two. And if that happens, then whatever trade was on this higher time frame, which is, like say it's better than half a month, all of a sudden, like, well, the high time frame trend is positive. Like, well, okay, but the trend being positive on the high time frame can quickly be negated. So I wouldn't be putting a lot of stock into that. I'm drinking my coffee here. I wouldn't put a lot of quote unquote stock in that, as Tom Sawyer would say. So what I'm going to do is roll down to a little bit lower of a time frame, go to our 3-day. So our half a week. Now that's looking bullish. Again, you're looking at a very low ADX sitting around 10. So the only reason that not the only reason, but part of the reason this looks bullish has to do with this move up, this sudden move up, right? So this move up, sure, it is, with ADX being so low, and it has been kind of increasing slowly, right? The move up is not unexpected. That is true. One can see that price had bounced off of prior support back here. Right in this area. So, clearly, price tends to not want to break a support. You have a bit of a high time frame double bottom right here. Price trying to break down, getting rejected to the upside, tries to break down, being rejected to the upside. So the move up was already in play from a price action standpoint. So now what we're going to do is take a look at the metrics, which are all bullish on this time frame. But again, you have a very low ADX, very low, volatility, right? So that being said, there is a decent chance that with low volatility, that if price were to, what I expect to happen, and again, it's based on the 4-year cycle, October, I think is just going to kind of look like this. Let's grad out our path, and I'm going to draw this like not as gospel, but just as a general idea, right? Because a lot of different things can happen. I think it's going to end up here, right? But I don't think it's gonna be a straight line. Okay, so I think it's that's the general idea. I'm not sure that it's going to break 31. If it does break 32, then I think it's going to pop up and, bunch back down. But this could go like this. Like this, and then maybe even like that, and then start heading back down. How low does it go? That's a real good question. If it goes down, it could go down to, I think, easily 18. We could revisit the 15 lows. And I'm just drawing this. I mean, this could really do a lot of different things, but let's ignore all the little funky moves. What really could happen here, and this is what I think it's going to be in some way, shape, or form. I think it'll basically make its way up, and we'll see head and shoulders. I think that's how it'll go. It can go like this, right? It also could straight up and then just kind of play around up here and then head down. That's very possible. Something like that. Very possible. And high time frame. You know what? If there is kind of a hard event, and at the end of October, maybe early November, we could see price go down as low as 15,000. Maybe not straight down. Maybe it'll pull one of these. But I think by the end of the year, we could easily see, price, or even maybe by the end of January, price revisit the lows. It's possible. It might not happen. Price might only go down to, make its way down to, say, 18. Maybe this, maybe it doesn't go any further than this right here. This support from back in March. Yeah, it might just stay right there and slowly head up. But I will say that no matter what happens, by, say, August of next year, whether it just hangs out down here and then maybe even has a little pop-up in May, I think we'll see price be heading up to the new all-time highs outside of a black swan, So, this is how I see Bitcoin acting. Kind of one of these two scenarios. That's my best. If I had to say, like, some put a gun in my head and say, what do you think is going to happen to Bitcoin? This is it. One of these two. And it's dependent on black swan. If you get a really, really bad event, then easily price could head back down to 15, revisit those lows, 15.5, the November lows. That can happen. Like 2020, the COVID, and they've been gearing us up for something like that. The masks are coming back and all that. So, if you believe that was a natural, unplanned thing, then good luck to you, because pretty sure that was planned. I'm not saying anything about anything medical or whatever. I'm just saying that it seems like they're calling that back into play. We're going to have the election variant coming, So these two scenarios are what I see with crypto coming up, very likely. So we'll have a month or so of coziness. Maybe 3 weeks of coziness, 3 or 4 weeks. It'll ideally, historically, it'll end higher than it began. So October 1st was, let me see here. Let's go to a lower time frame. So price started on the 1st at all the way back here. Now it's 29, 30. First, so around 27,000. So October to be a green month, all it's got to do is be higher than 27. That's it. That's easy. It's an easy thing. Let me see. It really started at about, right at like 27, right about there. So if it's higher than 27.1, 27.2, technically you've got a red month. So that leaves a lot of room for price to actually fall. So that's my look at Bitcoin. And of course, cryptocurrency is going to follow. For the most part, you'll have your odd crypto that doesn't go along with the Bitcoin trend. You have some that were doing really well while Bitcoin was faltering. That tends not to last more than a few weeks. If you have a system that allows you to find those, like a system where maybe you have I know we looked at some stuff in the private lab last week. We looked at some methods. We had the trading view, what do you call that thing? Trading view screener that allowed you to kind of look for certain metrics with cryptos, this crypto screener. Or there was a website that, again, I'll save that for the private group, but that was like a pretty decent visual website that allows you to kind of see which cryptos are performing, which ones are underperforming, things like that. And, I prefer to trade Forex. That's because to me, there are much more opportunities. I'll trade crypto when there's crypto to trade, which the last few days have been good, but the last several months have been trash, with the exception of those few that you can find that are outperforming. There is action there. The only problem with those is, when does the music stop? Right? You have some crypto that's like moving up hard, and that's good if you can get it, right? But then when's the music stop on that? So it's not my style to trade crypto in times like this, right? If it was a bear market, if everything was like dumping really hard, I would be trading crypto, because that's like alt season in reverse. Like, alt season has a reverse version, and it can be more profitable if you are trading derivatives to short alts during the negative alt season when everything is deflating. But that was 2022, mostly the end of 2022, maybe the beginning of 23. You could get those opportunities. So it's been pretty much dead all year, with a few exceptions. So that's how I roll. I like Forex. Forex has that too. I mean, August is super slow for Forex. It's just a month where you got to really pick your trades carefully. So at any rate, we are at the end of the free to the public beginner live lab. So, this is just kind of a taste of what we do. I don't really usually show anything terribly deep as far as my methodology on the free live lab. This is just for people to get some basic ideas. And of course, if you are watching and you're not part of Algo Factory, that's the idea. If you are part of Algo Factory, I did do this for our beginners, right? So, if people in Algo Factory have questions that are beginner type questions, and of course, I will go ahead and answer those. That's what I would do. In the meantime, if you're not part of Algo Factory, and if all the questions have been answered from our private members, then I'm willing to answer those questions. And again, we haven't advertised yet, so Algo Factory has not gotten very big yet. I mean, some people might think we're big, but we're not. We plan to be much, much bigger. And there's time to answer those questions right now, right? Like, as this gets bigger and more people can come in and watch YouTube with us and all that, we're going to have to kind of limit it to super chats at that point. So right now you can do it for free. So please come Monday through Friday, 8:30 a.m. EST through 9. In the meantime, I'm going to go ahead and flip over to our private group. Well, thank you. We love you for spending a little time with us. And again, hit that like button, subscribe, follow, share with your friends, all that sort of thing. We do have a really healthy affiliate program. So what we're offering at $50 a month is literally like it's nothing. Our competition charges like $300 a month, and we're doing more work than them. We're with you every single day, which is not the case with their competition. And what we're offering is amazing. For $50, if you get in before we raise the price, which we're going to do, then you get to keep that $50 a month. For this tier of membership, you get to keep that for as long as you're with us. So, because this tier of membership is going to go up. It will. We have some metrics that we're going to meet, and as soon as we meet those metrics, it will go up. And those who got in early and trusted us with their time and money will be rewarded for doing so by keeping that price. So please come join us. Come check us out, and we would love to have you. Enjoy your week. Enjoy your day. We hope to see you tomorrow.